there are certainly investors out there who, almost regardless of their investing experience, still believe that one party or another would be better for the stock market. The 24-hour news outlets, which seem to be migrating to diametrically opposed ends of the political spectrum, is also partially to blame. Nonetheless, if an investor only had money in the market under presidents of one party, their results would have been very disappointing. If you look at the slide on your screen, the left bar represents an investment in 1961 of $10,000. For this investor, they're only putting their money in the market when a Republican is in the White House. And as you can see, over that time period, their investment of $10,000 would only have grown to about $86,000 at the end of last year. If a different investor put $10,000 to work, but only invested under Democratic presidents, their rate of return would have gotten them to $376,000. But an investor that stayed invested, regardless of who was the president, would have turned a $10,000 investment into $3.2 million simply by staying the course. If nothing else, that just shows you the power of compounding and the fallacy of thinking you can time the market or whether or not who's in the White House makes a difference. To break this down into more detail, we have every presidential term from Herbert Hoover during the Great Depression through Donald Trump's presidency through the end of last year. So you could see the rate of return, which to the left means that their term resulted in a negative return for the S&P 500. The bar pointing to the right shows a positive return of the S&P 500. So as you can see, there have only been 4 presidential terms where returns were negative, and those were around the Great Depression and Great Recession. And I'm not sure we can fully blame either of the presidents at that time for any of those periods. There is some evidence that divided governments, which is when the president and Congress are controlled by different parties, have presided over lower economic growth and stock returns, but even they are strongly positive. So that in itself should be nothing to fear. You hear a lot of that in the media today, whether or not we have a clean sweep of the president and Congress and what that's going to do. And yes, that does create a little bit of gridlock, and it prevents real policies from getting done. But nonetheless, if you break that down historically, even under divided governments, we still see positive growth, both in economic terms and in the stock market.
I want to just say in these contexts of these, what I'd have to say is capitalism prevails no matter who is presiding. So it's just continue to participate. Sorry, Mario.
No, absolutely. That's a great point. One factor as to why this is the case is what you're just saying, is that companies are responsible to their shareholders to make a profit regardless of who's president, regardless of changes in regulation, taxes, tariffs, etc. And collectively, this data shows that they've been pretty darn good at it. So I definitely wouldn't be betting against the House based on anything in the political realm. And this chart you're looking at here shows exactly the same information we just looked at, but more so in a cumulative or aggregate fashion. So, again, going back to the Great Depression, this actually takes it one president earlier. If you had put any money to work and let it ride, regardless of who the president was, you would have seen a long-term growth trajectory.